happen. So, to me, Bitcoin, if someone wants to look at the chart, there was something that happened to the Bitcoin chart that I see very infrequently. And I've looked at charts for 48 years. And what we had in early November was what's called a wall down. It was a final capitulation of the bulls in Bitcoin. And so we went down sharply with some big down red bars on the candlestick. And, went into a period where we created this double bottom, no interest. I mean, there was no interest in Bitcoin at the time. There was just nothing going on. Quiet ranges, super tiny daily ranges, super small volume. And then we come out into the middle of January and we go a wall up. So wall down, wall up into a fulcrum bottom. That's extremely rare. And what it told me is Bitcoin is bottom. There is a bottom in Bitcoin. We're not going down. This is the bottom. We're going up. And so the subsequent rally that we had didn't surprise me. I think in Bitcoin, what we have, and it's arguable, people may argue with me on what I view with Bitcoin, is we have this head and shoulders bottom that started in the middle of June of last year and now climbed out here just recently in mid-March. We went through the neckline and we had a very stunted right shoulder that really kind of took the form of a broadening symmetrical triangle or an inverted symmetrical triangle. That it really became the right shoulder of this head and shoulders. And so I think that's what we have in place. We have a significant head and shoulders bottom in Bitcoin, but because that right shoulder was really stunty, it was abbreviated, we could have some testing. So it's not impossible, I don't think, for Bitcoin to come back, retest the neckline at 25 to 25 and a half, or even possibly go halfway back into this megaphone pattern, which would go back below the neckline and probably spook some people. And so I think if Bitcoin can decline back to 23, 23 and a half, we could shake out some of the late longs that came in here on the recent rally from, the March 10th low. There, you probably had a lot of people jumping in. So we shake those out and then Bitcoin becomes good again. So I think that's the interesting thing, because, again, my focus on Bitcoin, I think Bitcoin is back into a bull market. I think it's into a considerable bull market. And obviously, we've had one reason I wanted to get back on here, JK, is just news come out of the regulators. The regulators, the SEC and the CFTC are starting to take, put whatever components of Bitcoin, whether it be Ripple XRP or Ether, starting to put in the crosshairs of the regulators. And, I think in the final analysis, that's going to keep people from jumping in. And so that's going to allow Bitcoin to kind of climb a wall of worry ultimately, because you're not going to regulate Bitcoin out of existence. And the more U.S. regulators try to put the kibosh on Bitcoin, they can create some volatility, but the more they put the kibosh on, the more there's going to be a capitulation eventually away from fiat. And, that's my bet. People say, Peter, give me a trade that you believe is going to work. And I go, I'll give you a sure trade. It's the surest trade. It's a guaranteed trade. And the guaranteed trade is that fiat currencies will lose their purchasing power. I look at the U.S. dollar when I was born a whole lot of years ago. A dollar was a dollar. $1 bought $1 worth of goods or services, where now that same dollar buys 6 cents worth of goods and services. And anyone born today, a dollar is going to be a dollar. And that dollar, when they're my age, is going to be worth either nothing to 5 cents. And so how do you hedge yourself against the purchasing power of fiat currencies? I can think of no better way than Bitcoin, and that's why I'm not a Bitcoin maximalist, but certainly a Bitcoiner long term. Although there's some other interesting things happen, and if you want to talk about Ripple, that's fine. But I think there's the potential that Ripple is put in a really, really nifty bottom on the daily chart, so we can go there. So I'll kind of leave it to you to take this conversation wherever you want it to go, JK.
Yeah, well, Peter, that was a really, really good, discussion. Or thanks for sharing your thoughts. I mean, I think having you describe, given your experience on where the market is right now, is there's just so much value there. One thing that I see, and I mentioned it yesterday to some people in the Discord is, 2 days ago, looks like 3 days ago, Bitcoin put up a high at about 29.5. And for what it's worth, I completely agree with you. We get back down here to 23.5 and completely remain intact. On the other hand, I think if you get below, 20,000, not that I'm just using simple round numbers here, but you got to really start questioning whether that head and shoulders bottom is still a valid interpretation. I would start personally getting worried there about any new positions. But Friday, March 24th, we put in a high almost 30,000. 2 days later, on Monday, the market closed just below the low, setting up a 3-day trailing stop. So I actually initiated a new long position yesterday and set my stop at yesterday's low of about 26.5, and give or take about 5% because we're talking Bitcoin here. But I just wanted to call out that 3-day trailing stop because it's something that you taught me and that we discussed pretty in depth in our community. As it relates to, yeah, actually, if you wanted to say something about that, I'll let you jump in. Otherwise, I'll keep moving.
No, well, no, I think that's important. There's a couple things that when you get into trading, whether it's you're a trader to buy something and hold it for 3 years, or you're gonna you're gonna swing trade on daily charts or whatever the case may be, is to know your time frame. I mean, I can't emphasize that enough. I learned that really early on. Is I don't personally like the term bullish or bearish, although I use them. They're pretty meaningless terms. But bullish on what time frame? Bullish on what frame of chart? Bullish on a monthly chart? Bullish on a weekly chart? Bullish on a daily chart? It's extremely important for a trader to understand what time frame they're operating in. And to me, there's a difference between what kind of a macro opinion is that might have on Bitcoin and what a trading position might be. And for me, trading positions are based on daily charts. So I have rules that are key to daily charts. And you're absolutely right. One of the rules I have is, if you're long and you get a 3-day trailing stop, you've got to look to, you always got to sit by the door in the theater that's close to the exit, right? And so if, you're trading on a daily chart basis, or you're trading on swing trades that might last anywhere from, 1 to 4 to 6 weeks, then you've got to be sensitive to signals that come up on daily charts that might be headshots, foot shots, dojis, islands, and that sort of thing. Or if you're trading on a weekly chart or a monthly chart, you trade accordingly. So always know your time frame. Always know your time frame. And I'm just going to say one more thing on that, and that is, I've tried to mix time frames in the past. Maybe trade some positions based on a longer term basis, some on a shorter term. That's never worked for me. I never had success mastering that. Maybe some of you out there can trade multiple time frame approaches. I came to the conclusion I can't. I can't do it. And so I really have to focus within an account on an individual time frame. That doesn't mean to say I may not hold on to Bitcoin and lock them away and not think about them, but yet and then activate and then trade the daily charts in my trading account. So, but within a single account, I think it's real important for people to know what time frame they're thinking about. I'll go Mike's off on that one, JK.
It's so important. I completely agree. I mean, we got to compartmentalize those things. And just like you said, there's, if I may have a position that's stored away somewhere else, and I talk about these positions on shorter time frames, mostly intermediate time frames, that's not always, my main book, but it is always my trading book. I'm always talking about my trading book and not my, long term money that's in SPY and whatnot. So the other chart, I know you mentioned Ripple, and before we get there, just because we were talking about Bitcoin, I noticed that the Bitcoin dominance chart, if you zoom out, a couple years, it has now completely reached the top of this couple year range, back up to close to 50% of the total crypto market cap. So if, for example, another 3% and you're at a 2 or 3 year high in terms of Bitcoin market dominance, I think we all see and feel that, right? If you're on Twitter and you're on this space right now and you're in the crypto and or trading space, the rush of Bitcoin over the last 2 months has felt really similar to some of the other bottoms that we've experienced. And even if it was only a short-term bottom, it did have that sentiment attached to it that was almost palpable. I know there's a lot of news about Coinbase being served a Wells notice and Binance facing billions of dollars of money laundering charges. That's serious stuff. And right now, price action seems to be shaking it off. Binance, BNB really close to what I have as a breakout level. XRP up 30%, in 7 or 8 days. Peter, you mentioned the fulcrum bottom in week 4 of the Wizard Weekly. We called that one out and posted it on the Twitter page. So I encourage, because we did go through what a fulcrum pattern is and several examples of it, I would encourage you to go back to the timeline and check that out. If you're interested actually in hearing or talking about it, just reach out to me. This is what we do all day, so happy to talk about it. And yeah, Ripple is such an interesting play, because anybody that's been in crypto long enough, we've all heard the same Ripple story. It's going to take over the Swift banking system. It's going to be the new thing. Everybody that comes to me with, oh, I heard about Ripple, I'm like, let me guess. You're going to send me the graph of Ripple infiltrating the Swift banking system and becoming, the new global payment network. So it just hasn't performed. And like you said about Bitcoin, it has completely put anybody to sleep that has been familiar with it, myself included. It's almost become a joke, crypto. It's been so uneventful over the last couple of years. So now that it's breaking out of this bottom and we're reaching possibly conclusions of the SEC case, sure, there's still a lot of resistance, right here at the 55, 60 cent range, but we took this fulcrum bottom at 45 cents. So as long as we, focus on our time frame and manage that stop effectively and don't get gapped down overnight or something odd, which can definitely happen, then this was a profitable trade, and we won't let it turn into a loser. And speaking of, that's something that Peter really helped me get over. Was I've always been great at identifying these setups, and as anybody knows, that's hardly half the battle. So how do you maintain profitability? How do you not let a winning trade turn into a loser? That's been one of my biggest challenges over the years.
Yeah, hey, we're going to wrap up here in a little bit, JK, but maybe, we could take a couple questions from the community and kind of finish it off with 2 or 3 questions from the community before we shut it down for now. But, let's try to make a point to, reignite this spaces slot here at least every other week, JK. Just keep bugging me to do that because I think it's important. But maybe we'll take a couple questions here before we finish off.
Yeah, absolutely. That'd be great. If anybody has any questions, I don't know if that's like a setting. I don't usually host these, but feel free to jump up or post them in the Discord. A few things that we have talked about in the Discord, certain chart patterns. If anybody has a question about them, we'll kind of do a deep dive on it in the weekly report. I'm really not sure if people can even come up, Peter.
Yeah, you're an experienced spaces
This
driver.
is maybe my first one. We'll get some help next time.
Yeah, yeah.
Well, oh wait, no, we've got a request. Hold on, we've got a request, Peter. Wait, we've got one. Okay, everybody. Oh, we've got two. Oh my gosh, volatility clusters. Not everybody at once.
Hey guys, it's Scott here. Hey Peter, thanks for the question. Can you guys hear me?
Yep.
Cool. I just wanted to ask the discussion around Balaji's bet. Not so interested in the timeline element, the 90 days, but the underlying data around deposit flight from banks, etc., leading to an exponential rise in the Bitcoin price. I'm just wondering if you've sort of had a look through the supporting data and came to a conclusion around that, Peter.
I have not. You get off of charts and you get out of my league. I mean, that's the reality. When you get in kind of the macro view, there are a few people who I kind of follow on Twitter to get a feel, or else I DM them to get a feel for that sort of thing. But that gets down into granulars that just kind of leave me a bit confused, to be absolutely honest.
No, that's you've always been the chartist, so that's a very, very fair answer. And if anything, I take away from it is it just sort of confirms the narrative that you've always shared about your interest in Bitcoin. So I'll leave it at that. So thank you for letting me ask a question.
You bet.
Hey Peter, I guess I'll just jump in, and thanks for bringing me up. Also, I'm a subscriber, so been with you for a couple of years, so thanks for doing this. My question is, I was just looking at your post on the Factor Numbers account, and you refer to choppy markets versus trending markets. I'm seeing different data, which basically says maybe markets trend around 15 to 30% of the time. And so the question is, what do you do with the 70% of your time when markets are not trending? And so my question to you is, for some of the strongest trends, like over the last year or two, maybe like interest rates last year, again, comes to mind. Really not much this year. Like, how do you prepare yourself to set up for the next big kind of like super/mega trend? Are there any features that would kind of like initiate a bigger trend to you versus not? And just any other things you could do to like gain edge or increase your odds of like spotting something while you wait. And again, thanks.
Yeah, I mean, what you're referring to is really kind of some comments I've made recently about the type of markets, conditions of markets that, there are several ways to kind of look at a category of markets. You look at crypto, you look at precious metals, you look at grains, you look at whatever you kind of be, is those categories tend to kind of cycle through several different phases. One phase is you get some strong moves, you get follow through, you get trends that last more than a day or two. They may last weeks, they may last months. Then at market turns, particularly at the tops, you get high volatility, big swings, kind of similar to what we had in the stock market, I think, earlier in the year. And then you get periods where markets just chop, they go up, they go down, they go nowhere. You get a lot of false starts. You get excited about something that just disappoints. Markets just disappoint you. And the reality is, you're absolutely right. Trending markets occur maybe 15, maybe 20% of the time. So I have to just accept the fact that as a swing trader, if I'm looking for swing trades, which is really intermediate trends, I mean, it's really, a move of $4, $5, $6,000 or more in Bitcoin, they're not going to happen all the time, or especially if you get moves of 10,000 or so. It's a rarity, and so I have to just accept the fact that for most of the time, if I'm looking for that kind of move, I'm going to be disappointed. So what I have to do is take a number of stabs. I refer to myself as a trader as a grinder. I'm grinding it out. I'm throwing mud at the wall, constantly throwing mud at the wall to see if something sticks. And when it sticks, I have to ride it. I have to overcome my urge to take a quick profit, see if it can extend itself to some degree. And if it turns against me, I have to run quickly. I can't stay with it. And so it's just really, it's a matter of trying to cut losses really short, letting runners' profits ride and not taking quick profits, even though you've taken 19 out of the last 21 trades were a loss, then you get a profitable trade and you want to take it right away. Just letting that one ride. And then it's a matter of expectation. It's a matter of expecting the fact that if that's the way you trade, you're trading for swing trades, you're trading for doubles, not necessarily home runs, but you're trading for doubles, equating it to, American baseball, that most of the time you're going to be frustrated. And there's only going to be 2 or 3 months out of the year where when you look back at the year after the fact, you can say, gave me the kind of markets where I can make money. And so most of the time you're trading water and you just accept the fact. And you keep trading the same way and you keep doing it over and over and over again. I think what really hurts people is they're always trying to adjust their trading. We got trending markets, so I'm going to trade trends. We got choppy markets, I'm going to learn to trade a trading range. You got volatile markets, I want to mean revert. It's attempting to force your trading into the markets of last week is never really a good way to go about it. You need to try to just kind of commit yourself to an approach and accept the fact that no matter what the approach is, there's going to be good times, there's going to be bad times, there's going to be times that frustrate you. But there are going to be times when you catch the green markets of 2022, the interest rate markets of 2022, and those are the markets that will thrive on it. And those of you who I've communicated with for a considerable period of time know really what I talk about when I talk about the concept of Vilfredo Pareto, the Pareto principle, that no matter what the endeavor is, 10 to 15 to 20% of events create 80% of outcomes. And I will tell you that is true for me year in and year out, no matter whether I want it to be true, try to have it be true, or whatnot. 15% of my trades provide 80 to 85% of my profits. And it just doesn't matter. I can go back year after year after year, and it's the same thing. I do the analysis every year. I do a Pareto analysis of my trades every year, and it just always is the same. And I've talked to a lot of other career traders who tell me the same thing, no matter how they trade. Event trading, macro trading, options trading is Vilfredo Pareto rules the trading world. And so it's coming to that acceptance that, your job as a trader is really to manage the 85% of the trades that will be in the garbage bin. And to try to recognize when you might have a 15%er and you let it run for a while. So anyway, I've talked enough, JK. I'll hand it back to you. And
no, that was great. And thank you, Future, for the question. I did want to add, because, as someone who trades discretionary other people's money, like there's nothing worse than hitting that losing streak with other people's money. So sitting in the room, with someone watching stuff go down for 3 months is absolutely terrible. And so what I've come to learn over the years is that when I've had a series, a hot streak, right? Like I didn't have any requests up to speak, and then suddenly there were five at a time because that's when we asked for it. So there are these volatility clusters, and if I catch myself getting two or three winners in a row, the best thing I can do is go touch grass and walk away for as long as possible, knowing that there may be a regime change around the corner, just backing up in the macro scheme of things. So hopefully that adds a little bit of color.
We have one more question there, JK. Let's take that, and we'll end it for this week anyway.
All right, thanks.
Looks like Future has his hand up.
Well, I'm cheating a little. I'll ask a follow-up if you don't mind. But so I noticed, I think, Peter, you're up this year in terms of your account despite the choppiness. And so my question to you is, your trading style may not change, but does your risk management or your stops or kind of anything else change about your trading when you're sort of in like the P&L building mode? I always think back to Stan Druckenmiller, who talks about, earning the right to trade in bigger size as he accumulates P&L. And so I've, noticed this year, I'm assuming you have maybe many accounts, but the one you track for factor members is up despite the choppy environment. So have you, do you alter your strategy to kind of slowly build P&L if you're not in the type of trendy environment that you like? And again, thanks, guys. Appreciate it.
That is such a good question. Thanks for asking it. Well, that's such a wonderful question. Yeah, I'm up for the year, 13%. It's just, I've had a fight to get that. I mean, it's just been a battle to get there, and I've just had to scrape it out and take my bruises to get there. Although, I had tough periods last year. I think some of you who kind of follow what I say, I remember last year where I went literally 19 out of the 21 trades were a loser. I think it was like 27 out of 31 trades were a loser. So you go through those periods, and I agree with Druckenmiller. What happens is you have to put yourself into a position where you can size up. And let me speak to that because I'm not there anymore. There was a time when I started trading, and this goes back in the late 70s, early 80s, where my goal was to build an account, build as big an account as I could possibly build. Build an account up. I mean, I started in '81 with $88,000, and my goal was to get to $1 million account. And after that, it's let's take it up a level. And in the process of doing that, you look for asymmetrical trades. Is you try to find some little technique that tells you this is a trade that I can put my shoulder in and lean into. And, whatever that might be. And I think you need 5 years worth of trading experience to get a sense for what is a trade that you can really exploit to grow an account significantly. I'm no longer there. I mean, I've been through that stage. For me right now, I just trade to earn a certain amount. My goal is to just take a certain amount out of the markets each year, knowing that there's going to be years when I can do it and exceed it. There's going to be years I'll fall short. And so I'm trading for income to a certain degree, and so I'm long past the idea of trading to grow an account significantly